All right, everybody. We are live. We are live. Let me put this out into the world. Let them know that I am indeed live. And let's close the market. Because we got to close the market. Since the market is closing. Okay, let me put this out on Twitter. Live market close. Let's do that. I started a little bit of a new project today that I'm excited to share with everybody. Ahad, what's up? What's up, my guy? Live market close. If you check the description, I have a new Twitter account that I've launched called Ginkgo Daily. I am going to be covering the company Ginkgo Bioworks daily. And I'm pretty excited for it because not that many people are covering this stock. I think this company not only is massively undervalued given what has happened over the past year. Not only do I think that valuation is why Kathy Wood is buying a lot of it, but I haven't gotten this excited for a stock in a long time. And so it's almost like when I discovered Palantir again, there was such a unique euphoria for the company because it was just such an interesting concept, interesting idea. Well, I feel the same about Ginkgo. And that doesn't mean everyone has to feel that way. That doesn't mean you have to buy the stock, none of that. In fact, the stock has a very big float, so nothing's going to change it. It does have 90% institutional ownership, but I'm going to be talking a lot more about it because it's exciting, Palantir, we're ending up the day, 784. Now, we've had basically a green day. What's up, Amit? What's the new Twitter? It's in the description. It's at Ginkgo Daily. It's in the description as well. We've had a relatively green day. Nothing that interesting has happened. I mean, Tesla outdoing everyone's expectations at a $965 billion market cap, $308.15. S&P was at 382 this morning. It's recovered to about 388. So not testing the hard bottom yet. It's kind of just, stuck there the way it is. AMD at $76. Also, nothing changed too much from that. ARK at 42. Most companies on the day are pretty up. SoFi was below. I bought a little bit of SoFi today. It was below 6 at one point. It's like 592. Now it's at 6. Apple fell to 149. Now it's recovering to 154. Google fell to 101. Now recovering up to 103. So not testing the all-time bottoms, or else we would have seen an even further decline. Bitcoin was at 18K this morning. Now it's at 19.4. So recovering a bit from there. Question is how deeply it goes. Subscribed on Audio too. I love it. Thank you, Ahad. Means the absolute world to me. So we're going to see, how low can we really go when it comes to what's going on. Now, granted, things are relatively green for the day. That doesn't take away some of the things that have happened over the past couple of days. One of the main ones being the heightened geopolitical tensions with China and Taiwan. China has literally come out and China had an interview or a meeting with Russian President Vladimir Putin, and they both quote unquote discussed different things that they were going to do. And the reports are saying that China is emboldened by what Russia's been able to do with Ukraine and potentially leverage that against Taiwan. Now, will that happen? I don't know. But if it does happen, it's obviously not a good thing, right? It's not going to be the best thing in the world for both companies or for both countries. So that heightened tension, I think, is playing a little bit of a role in the market. President Biden yesterday said that he would defend Taiwan, and the United States would defend Taiwan if China were to invade. So there's things from that. Inflation, Biden also said, is getting a lot better. Obviously, it's not getting that much better, but it's at least not as bad. Roku at $72, Twitter somehow at 49 still. I don't understand that, or 41, but I guess it is what it is at some point. Let's go here. So we have about 10 minutes till the market close. Let's pull up a video and see some of the stuff we're saying. Amit buys 2 new stocks, starts 2 new Twitter feeds, and does 7 more daily podcasts. Felicia, I'm out here working. I need to make your investment give you a return one day. You know what I mean? I gotta work. I'm also going to be starting a SoFi daily account because SoFi is also something that I'm very excited for. So I'm becoming a stock central source, I guess you could say. Let's see what's going on in different elements of the market. Let's go to this one. Here we go. The Fed will push until, well, no. Let's hear something a little bit different. Let's hear what Kramer is actually saying. Let's hear what he's saying. Let's go to our boy. DXY looking pretty today. If it falls, it'll be a good catalyst. That's not a stock, right? That's a crypto, right? I believe it is.
I want to get out to the West Coast this morning where our friend Jim Kramer has a great view. He's in San Francisco. Jim, nice to see you, sir.
It is so good to see you, Andrew. I miss you.
We do too. We're trying to understand what to think, though, of another morning with a lot of red on the screen, and we're going to be hearing from the Fed later.
Well, I think it's just completely an adjustment again versus the 2-year. If the 2-year goes over 4, people just sell tech. It's interesting, Andrew, because the only news we have today is AutoZone, and it's good. It would seem to lead that there are more, let's say, used cars, which would therefore take some pressure off the Fed, but it just doesn't matter. We are in a moment where stocks are going lower, and they're going lower maybe through this month simply because we're trying to adjust for what a stock is worth versus a very simple, terrific piece of paper that's yielding 4% over the next 2 years.
But, Jim, does that mean this is a buying opportunity? I mean, we heard from Thomas Petterfy. He thinks this thing's going to continue. I mean, you just said it's going to go lower. Petterfy thinks, everybody thinks it's going to go lower, in which case maybe that's a good time to actually be doing the opposite, or no?
I think you have to hear from the Fed first. I do believe that there is a slowing everywhere. I think our FedEx interview last week showed that it's a little dangerous to keep taking rates up. The Sternlicht interview, a little dangerous to keep taking up. But the Fed has said there has to be some pain. So if they do what Goldman said, 75 and then 50 and 50, we will get to 4. We will get to more pain. And I think that we can't really be as bullish as we would like until that happens. And then we will. But you can't send tech stocks down every single day on the same piece of information. However, there's obviously some weakness. We need to see more price target cuts. Maybe we need to see some shortfalls, Andrew.
We got to run, but is there any place to hide that you think's worthy?
Oh, no, I think there are a lot of places. I think that you can hide, in healthcare. I think healthcare is very good. I actually think the banks are good because let's forget about how some of the regionals have to raise money. That's a good portion of the market. I think that some of retail is very strong. I just think it's tech that's weak, and we're a tech-dominated market.
Let's actually look at some of the banks that he's talking about. The logic for hiding in the banks is interesting. Let's go to Bank of America. How has Bank of America done this year? So they were, let me go to the max. Hold on. Bank of America was at beginning of the year, $25. Bank of America is now at $24. So it's better than the tech stocks that have just got destroyed, right? So I guess that's one argument. What about Wells Fargo? Okay, hold on. Let's go to a good one, Wells Fargo. So Wells Fargo, at the beginning of the year, was also $24, basically the same. It went down to like the low 20s at one point, but relatively the same. Nothing necessarily changed. Okay. I will never invest based on anything Kramer says. Yeah, Kramer's interesting. Kramer also said that Nvidia is time to sell, and that may be a signal to pick up some Nvidia. What else do we have? We got Wells Fargo. We got the other thing. We got Bank of America. We got JP Morgan. Okay. JPM 118, and then on the full year, they were so they've been declined pretty. They were 150 beginning of the year, so they've declined pretty massively. So Bank of America, Wells Fargo have stayed stable. JP Morgan has fallen down to 45 on the RSI's 118. Their market cap is $346 billion. Very interesting. I don't know if the banks are a good place to hide. I mean, tech is definitely not the best place to hide, given there is no hiding when it comes to tech. I don't know if the banks are the best place. I guess in a recession, you could argue that people spend less money and keep more of it in the bank. And as a result, the bank just has more money to play with and do different things. So the question is, where are they going to put that money? I mean, yeah, you could say bonds, and I guess they just increased their positions, but I don't know if that necessarily changed anything. Joel, what's up? Kramer was bullish on Nvidia when it was 300 not too long ago. Now the price is pretty much at multi-year low with most of the bad news priced in, and he said to sell. What a joke. I agree. It's a bit weird because Nvidia is one of those stocks. They're literally making a digital twin of planet Earth. I talked about that today in my podcast with Alex that I put out a couple hours ago. I mean, like, that's like, you got to realize the amount of tech and AI and just like superpower it takes to be able to do that, and how that can be used to predict a lot of things. So the point is, like, the bull case on Nvidia as a company is amazing. The stock has been destroyed. I mean, if we just look at it from the max, where are we at? 346 November 2021. So it's down over 200% since then. And then since 2022, it's been basically at 250, 290, and it's down to 130. I mean, like, one could argue a lot of the bad news, the CHIPS Act, the not selling to China, all that stuff, that is probably baked in. Their guidance was much more lower, which freaked out the market as well. But to not imagine Nvidia as being a super big part of the economy over the next 5-10 years is probably not the best bet. Now, in the short term, is it a good buy? It's at its lows. The question is, are we going to get lowers and lowers and lower, right? He said hide in healthcare too. Yeah, I don't know how healthcare necessarily is a good high. People are supposedly taking more money out of the bank recently. People might be buying. People might be like, man, it's time to buy. Guys, Kramer funny. Nvidia, the next big thing. We used Nvidia tech for the hospital for VR operations. Yeah. Nvidia, the tech is something no one can deny. I mean, the tech is just absolutely phenomenal. The question is the stock price right now. And it's at multi-year. Literally, its 52-week low is 126. It's at 133. It's why I've been buying over the past week as well. I mean, I have enough dry powder where I feel comfortable to start putting it in. If we get a 3,400 on the S&P, I'm just going to DCA on those positions. But those stocks are not leaving. Like, Google's not going anywhere at the end of the day, you know, especially if you take a 5-year kind of horizon on this. Now, stocks that I'm looking at that are at lows that I don't want to necessarily DCA in, but that I am trying to pick up at the low are stocks like Ginkgo and stocks like SoFi. They're pretty exciting. I'm not going to lie. Like, I've got a lot of content coming out on them, but they are pretty exciting. Ginkgo up about 2.51% on the day. Spotify closing in under 100. We got the market close in about 1:40. So the bell is ready for those who are new to this channel or haven't been here before. You should get ready for when the market closes, because I will be explicitly closing the market. If Palantir went to 5, would you sell your Google? Maybe. I thought it said if Palantir went to 5, would you sell? And I was about to be like, yeah, absolutely not. It depends on how bad I'm down on Google. Like, I got Google at 101. If Palantir goes to 5, Google's going to be at like 90 something. So it'd be like a $50 loss. But I think I would just buy more Google and Palantir. That's it. Like, I would just get both of them. I'll be blowing my cyber whistle. Joel got the cyber whistle, guys. Only because he had Doge, so he was able to buy it. Only because this man had Doge. All right. Market open about 48 seconds. So we are going to see what happens. Nothing too exciting when the market closes. I mean, we had a relatively green day. Wejo is down 6%. Goodness, this stock is just getting absolutely demolished, man. I haven't read through their last earnings. I think it was good, though. They went up 10% the day the earnings came out. But I haven't seen it in a while. Or at least I haven't studied them in a while. So we'll have to do more to understand about this stock, Wejo. Even though I'm literally going to cover their company in Las Vegas in a couple weeks. Or next week, actually. It's coming soon. All right, here we go. The market on September 19, 2022 is now closed. The market is officially closed. Where's Chris? Because we needed Chris to be here. The 21st is going to be a big day, guys. Why is the 21st going to be a big day? Is it like your birthday, John? Why is the 21st going to be a big day? Walt Disney, we've got at 109. Rubicon 3.6. Rubicon SPAC like a couple weeks ago, and literally they just got demolished. Target 164, Walmart 134, Netflix 243. Netflix actually ended green on the day. Tesla, Google 103. Tesla managed to hang through. Coinbase under 70. Wow. This is one of those Kathy picks I wish she never made. I mean, this one is just so it gets me annoyed she picked this one to be like a top. Like, imagine, I don't know how much money she has, probably like 100 million. Imagine she just put that into something better than Coinbase. Coinbase. Adobe 296 down another percent. It's down now about 20 billion bucks off of the 20 billion they've already paid for Figma. Meta 148. Nvidia 133. All right. That's that. Let's go into some videos and see what else is going on. Oh, Fed meeting. Yeah, of course. That bell is more okay. D-splash. That's mean. That's mean. Interest rate hike on the 21st. Yes, that is true. First market close for me here. Uriel. Shout out to you being here. Appreciate you being here. Bay Ray, what's up? Tesla is so extremely undervalued. The best risk adjusted. Joel, tell me something new, because your analysis has been relatively basic about Tesla for a while. Okay, that's all I'm gonna say. No, I'm just kidding. But it is interesting to see Tesla not have to worry. I mean, whatever's happened, Tesla's continued to just stay strong and keep it going. All right, let's check out this one. What are we gonna see? Let's hear if the Fed should raise by 125, because maybe that's what we need to get things done. He said you basic. Oh, yes, I did.
Street, I should say, making you highly unpopular on Wall Street, recommending the Fed raise rates not by 50, 75, or 100 basis points, but 125. Tell us why.
Seema, I'm trading short-term unpopularity for long-term popularity. That would be the best way to put it. Yes, it is difficult for the markets if the rates rise by 1.25 percentage points. But if the Fed actually does that, they are going to be ahead of the market for the first time, rather than be a simple follower, which the Fed should not be. So Jerome Powell.
I think that actually makes a lot of sense, by the way. If the Fed were to raise by 125 bips, instead of like being behind, they would actually be in front. Now, would they risk really crashing the market? Yes, but eventually it'll come back. Like, eventually that might actually tamper inflation, which means the market could bake that in. Yes, we're going to go lower and lower, but we'll move on by the time it comes to the midterms. So I'm not necessarily opposed to that. That would actually be a radical move that would theoretically make sense.
Has repeatedly said inflation is going to be transitory. Even when he changed his mind, it took several more months before the tightening to begin. So the Fed credibility is still very low, Seema. What I'm saying is doing 1.25 percentage points is going to do a lot in terms of helping credibility. And that is very good for markets, both equities and fixed income over the medium term.
Shri, beyond the Fed's 2% target, how much weakness in the labor market is the Fed willing to tolerate? We've already seen unemployment rise from 3.5 to 3.7%. How high will they allow it to go? 4.5%? What are you expecting?
I think 4.5% is fine in terms of acceptability for the Fed, Seema, given that the midterm elections are taking place this November and we don't have the presidential elections for another 2 years. So the political side of it is going to be relatively dormant, so you can tolerate a higher unemployment rate in the short term. Here is the problem. And Brian spoke earlier in the program about possible credit events. If you have a major institution that is about to fail, as we saw in 1998, 2008, then typically the Fed springs into action, gives up all of its anti-inflationary message, and switches over to flooding the market with liquidity and bailing institutions out. That, to me, is the risk, Seema, not a higher unemployment rate.
Hey, Shri, thank you very much for the shout out. Do you think there is a risk of a credit event? I mean, Scott Miner, the previous hour, talked about commercial mortgage-backed securities, not as big as residential. We get that. It's not '07. It's not '08. Nobody's saying that. But the reality of it is, if you got a bunch of half-filled skyscrapers in San Francisco and LA and Portland and New York and Chicago and a couple $100 billion in debt on them, that is not a small thing.
It is not a small thing at all. And what we don't know, Brian, is to what extent those events, even if they are not a 1998, even if it's not a 2007, what if they cascade one on top of the other and you have 2 or 3 institutions which get hit with a domino effect? That's something we do not know. I don't think the Fed is aware of it as well either. And if that happens, that's when all the bets are complete. You need to change your playbook right away if that happens, because the Fed is not going to stick with its anti-inflationary stance anymore. That's the problem with the what I have with the Fed today. It is easy to keep citing Paul Volcker at every press conference. It's a lot more difficult to behave like Paul Volcker. Again, during the beginning stages of my career, I watched the tractors rush over to Washington, D.C. to surround the Federal Reserve building because the interest rates were so high. There were construction people who were shipping bricks over to the Federal Reserve because there was no construction industry. There is no way this chairman, this Federal Reserve is going to go to any of those lengths to control inflation. And with having let inflation go to such a high level, Brian, they have to do a lot more than what they have done so far.
It's very controversial. It's very controversial right now. I personally agree with the guy, to be honest. Like, the Fed has shown they are absolutely not credible in terms of letting inflation get to this level. They're not willing to do what we did a long time ago when inflation was at all-time highs. And obviously the macro geopolitical conditions, everything's different. You don't need to raise interest rates like 18% or whatever. But you got to raise them more than 7. Like, I don't know. I think you got to raise it. The Fed needs to reverse course. Inflation is peak. PPI is a leading indicator. CPI is a lagging indicator. Maybe. I mean, I guess October CPI is going to be the most important, right? 75, I think, is at minimum what we need. Because, yes, there is an argument for inflation peaking, but there's also an argument for us not actually ripping off the Band-Aid. And all these little 50 base bips hikes are not going to do much to actually change that. Whereas a 75 might, a 125 might actually do it. I would say 75 is definitely going to happen. I think it's weird to assume 75 is not going to happen. If they did 50, they would have to really think that inflation has peaked and there's no problem with it. The problem is Jay Powell on August 26th did not think that. Like, the guy was like, this is going to be bad. And if he thinks this is going to be bad, then it's probably not going to be the best. Welcome to 2022, where I consider a 0.4% down day positive. Yes. Someone said, if housing market crashes, would you sell your stocks to buy a house? I've actually been thinking about this deeply because I've been saving up a decent amount of money to go half and half with some family members on a house by June 2023. But the more I look at stock prices right now, the more I'm like, I don't want to save that money until June and like keep it in a bank account. I want to put it in the market. The risk is the market crashes even more, and then I can't buy the house, right? I can't go 50-50 on the house. But the benefit is, you get to keep that money in the market, and you might invest in some plays that could potentially 2x by June 2023 if the market has bottomed. Now, JP Morgan has called a bottom on this market. I just saw the tweet around it. Let me see if there's an article. JP Morgan, let's see. JP Morgan. It seems like JP Morgan is calling a bottom right now. They actually said S&P to 4,800 by the end of the year. That's what JP Morgan did say. Now, they said that about a month ago, so we're going to see if that happens. What's your personal thoughts on the inflation? Do you think it's a better idea to pull the Band-Aid? I know you're not fortunate. Yeah, I think it's better to pull the Band-Aid. I said this in June. I said that, rip it off. It's going to be some pain, but we will get back to normal. Inflation, will be fine. It'll be pain in the beginning. It'll be rough, but if you just rip it off, we won't have to keep playing this little chicken and the egg game every single month. What are they going to do? Just rip it off, and we'll move on. eventually tech needs to move on from this. And the only way for tech to move on from this is for inflation to go down. So we got to curb inflation. That's it. If you believe inflation is transitory, as Kathy's been saying, and it's naturally going to go away, we have to see October data for that to be truly like correct. Because, I mean, we weren't correct back in January 2021 when we said inflation was, or 22 when we said inflation was transitory. Have you seen Alex Karp interview from Swiss? Yes, I have. It was a great interview. It was a great talk. I definitely will buy a house if they crash the 2008 prices. Yeah, that's why me and some people were going half and half on houses. We were thinking of buying soon, but then we're looking at interest rates for mortgages. It's like 6%. It's like, all right, there's zero reason to do this right now. Sometimes less intervention is better. Sometimes you create more problems when trying to solve one. I agree. I'm not saying you're wrong. I'm just saying no one knows, right? But maybe another pandemic would stop inflation. Another pandemic would mean more stimulus, which would mean, because there's no way we get through a pandemic without stimulus. If people can't go to their jobs, yeah, there's going to be more stimulus. I mean, it's going to have to be. Do you think there wouldn't be inflation if, or there wouldn't be stimulus if we had another pandemic? I feel like, I don't know how we would pay for it, but I feel like it would have to happen. All right, since we're talking about housing, let's hear Kevin O'Leary and some of his thoughts on housing.
The bank is out with a very positive note today, double upgrading its outlook on that space to overweight. Kevin O'Leary, is now the time to upgrade home builder stocks to overweight with a 20% upside? Really?
It's a counter call, and I like calls like this because it takes a lot of guts knowing the Fed is still against you in headwinds because mortgage rates are definitely going up. Just look at the 2-year, look at the 10-year. But bottom line is, in this country, we do not have enough housing. That's a problem. And so even if interest rates get mortgages up past 6%, there's still going to be demand for housing because historically that's not really been a very high rate over a 30-year period for mortgages. So end of story. It's gutsy, I got to admit. And there's one other thing to look at. If you look at Home Depot, which I consider such a great index for housing, and that's a stalwart. It's been in indexes like the Alps OUSA forever. Mm-hmm. It's been beaten up, but it's got a 16% increase in dividends. It's got an ROA of over a double digit, and it pays a really good div yield. It's in the same boat. If you're going to buy housing, you might as well put an allocation into Home Depot.
I mean, not really. If you might choose to fix up your house rather than buy a house if mortgage rates continue to go up, Kev. I mean, I can understand the Home Depot play, but it's not in the same boat.
The sentiment against housing really goes to Depot. Depot's getting beaten up, and I think it's a fantastic company because it's got great metrics. We talked about the importance of dividend yields. We talked about that's a really good way to look at a company's ability to stay on course with their business model. Depot's management has been weathering the storm, and every time you get a downgrade on housing, the stock gets beaten up. And I agree with you. It really doesn't have a lot to do with new houses. But if you are going to make new houses more expensive, you're going to spend a lot more time fixing up housing. So I'd say if you're going to go and buy an index of home builders, add a little sauce, just a little sprinkle of Home Depot in there too. You're in the same sector.
Yeah. Well, Shannon, you own it. So I guess you agree with Kevin O'Leary. The question is, do you like it more than, as you would say, adjacent stocks like the builders?
Yeah, we definitely prefer housing adjacent stocks, Scott. I think in this period, we're anchored to a very low mortgage rate for many buyers. New buyers are not seeing that inventory. One thing that could really change for home builders, though, and an area that we obviously haven't been in, but if you start to think about the rent increases that we're seeing as part of the CPI print, and buyers start to accept that mortgage rates aren't going to go back down under 4, at some point you hit that inflection point where supply has picked up incrementally. We're seeing it already in terms of month of supply, and rents are increasing at a rate that start to push, potential buyers into that territory. So I think the housing market is not dead, but I do think there's going to be a delay in some of this demand. And I think this call on the home buyers is a little early.
What do you think?
I want to get, I'm listening to this segment and I'm thinking going second derivative on housing. By the way, the concern that I have would be credit availability more than anything else. Louisiana Pacific, that is a great second derivative trade off of this. It's a name that I've owned in the past, trades it 3 times right now, gives a dividend.
So I think this is going to be really interesting. Now, the reason I think housing stuff is really interesting and what Kevin O'Leary is talking about is because I don't know if you guys have seen this recent Meet Kevin video. But he made an video. I didn't get to watch the whole thing, but he made a video that was interesting. I like Lowe's over Home Depot as well, to be honest. I think it would be better. He made a video about warning the real estate collapse is bankrupting Opendoor. This is an interesting idea. Obviously, Kevin has a new company that is competing, in his words, not my words, against Opendoor. And so one takes a look at this video and you have to take a little bit of caution because you're like, okay, if the guy's competing against Opendoor, obviously he's going to not be a fan of Opendoor. But I also think there's probably some good numbers. And basically what he's saying is from the part of the video that I got was that Opendoor was buying houses in January at the top of the market. And there's like for 1.3 million, he gave some real examples. Now they're selling those for like 1.1 million. So they're taking these like multi-$100,000 losses on some of these houses. And that real estate collapse might be not good for Opendoor. Let's just say that. Not the best one. Let's actually look at Opendoor's stock price. Opendoor's stock price has been demolished, and it's been demolished pretty badly over the past couple of months. You said any thoughts on Airbnb? Well, let me look at Airbnb real quick. I have not been a fan of this stock ever. 118. They IPO'd at 63, but they ran up to like 200 that day. This was a traditional like. They shouldn't have IPO'd at 63. They should have IPO'd much higher, but the banks got so rich off of taking them public because they quoted them 63, but the demand for buying shares was so much higher, especially this was during the bull market. Airbnb has never been a stock I've been really interested in or excited about. I don't know too much about their financials, but they're not that company that you think is going to like 10x or anything. Like they're just like, they're a new version of hotels that have pretty decent, I guess, margins, or not even margins, but just like a good business that's always going to have free cash flow. I guess that's what I'm trying to say. Market cap of $75 billion. You know, it's like a Uber type of company for houses. It's not that exciting to me. It's not as exciting as stocks that I think could 10x, you know, that's why I don't even think it's like a safe stock either. Opendoor is at 388. Opendoor is down below 4. Opendoor has been hit pretty bad. I mean, let's look at the max. The highest it was at $39 back in February 2021. It's down significantly from then. It was hovering around $4 to $5 for the past couple months in June and July, and now it's finally down below. If Meet Kevin is correct that they are losing money, same like Zillow was losing money on iBuying, then Opendoor is in some trouble. It's not going to be the best. Guy says, never trust Kevin. He recommended buying Square at 120. And then last month he claimed he saw his recent decline coming and that he advised against buying Square, just plain lying as always. Yeah, I don't know if that's necessarily the case. Maybe it is. You might be totally right on this. But at least on Opendoor, I don't know. I think there's some analysis here that they may be in a rough situation. Now, obviously, his startup is going against them. So he wants to be able to make the point that his startup is doing better than Opendoor if he's taking them on. So I get it. I mean, it's a little bit of spreading some FUD around your competitor, even if it's not really FUD, but it's what you got to do. It's how he plays the game. But I've never been a buyer of Opendoor because I've been always like, if iBuying didn't work for Zillow, I'm not sure why it would work for Opendoor. I also don't know what differentiated like technology algorithms Opendoor has to be able to make it work for them over something else. So I guess we got to see. SoFi down a little bit after hours as well. Kevin is a great trader, not really a long-term investor. I agree. I see a bunch of new apartment complexes being built in my city, which is good. I think that's going to be happening as well. Thoughts on Intel? Rough EPS head, rough revenue head, but price is pretty low. Intel is one of those companies. Let's look at that stock, and then we'll end out the market close today. Intel has been, I actually have a clip on this with Alex from ticker symbol U I have to upload. This is a stock that has sacrificed a lot of innovation in order to protect their dividend and how, you know, protect their theoretical growth. I've never been a fan of Intel. And I think, I mean, that makes sense. I'm into more high growth tech that's more innovating. I don't know if it's a great stock to own. I don't know what their future is going to look like, and I don't know how management is going to try to get them into a different. Same thing with IBM. IBM was 125 last time I checked. Where's IBM? 127. Yeah, so I checked IBM like a year ago, and it was 125, and now it's 127. You know, just like if I had money, I'd rather bet on stocks that I think are actually going to grow, companies that are actually innovating, doing stuff differently. Like I like Apple better than Intel, and Apple pays a very small dividend as well, but. I don't know. It doesn't make me the most excited at the end of the day. Sorry, I'm late. DRK, no problem. Thank you for even being here. Take your thoughts about Meta. I think they were good. All right, let me do that. Let me talk about Meta a little bit, and then we'll end it out. So Meta is very interesting to me, okay? The reason Meta is interesting to me in my initial thesis, Jason, let me get your content question. Just reading that Biden appointed DNA VP Renee to head the Advanced Research Project Ancient Health. Interesting company. Seems to be picking up steam. I agree, Jason. I'm going to be covering that in a future video. DNA Ginkgo Bioworks is exciting. It's really, 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 really exciting. So my thesis on Meta to me is like they have all the users and everyone uses it, even though everyone hates it. Like I use Facebook because I've been posting content on there, and like one of my videos got 1,000 views. I was like, all right, I'm gonna keep posting here, right? It's like it's one of those like old clunky things that still is there, and so you might as well use it. Another thing to remember is Facebook is not like America when it comes to media. In the media, we have hundreds of thousands of different blogs and editorial sites and opinions and perspectives, and you can go direct to their websites, all that stuff. In certain parts of the world, Facebook is the news. People don't go to an external website. They go to Facebook. And the United States only has 300 million people. In a lot of other parts of the world, you know, billions of people are using Facebook in that way. So Facebook's use case is obvious. Their Instagram is not as good as TikTok in terms of entertainment, but it's still being used. And WhatsApp, 440 million DAUs that aren't even monetized yet. And then it's trading less than 11 times EV to free cash flow. I mean, for a tech company to be trading at those multiples, it's a price to sales of 3. 400 billion in market cap, 128 billion in revenues. The question is, do you feel comfortable owning it given all the publicity and given their potential inability to innovate in the context of other entertainment apps that exist that are going to do better than what Instagram and Facebook are doing? If that's the case, then you hold a long position. I think when the bull market comes back, Facebook's obviously going to rally. The question is it going to rally as high as 300 to become $1 trillion company? Who knows? You know, we got to see. All right. Thank you all for watching. Market open. Metaverse. Yes. I see. I don't even include the metaverse because I've never been a fan of it. But the metaverse, if that works out, then there's another significant growth opportunity there as well. WhatsApp is used heavily in the Middle East, India, Brazil, the Middle East. WhatsApp is the premier messaging application because iPhones use iMessage. Most of those places have Androids. Androids don't have a native messaging platform. So WhatsApp becomes that native messaging platform. So, all right. Someone said, don't go a bit. Rizzy, I got to go. I got to go back to work on my startup. For those who have not checked out my startup, link in the description. Please sign up. Would mean the absolute world to me. Give me some feedback. Also, I launched a new Twitter account called Daily Ginkgo. I am now going to be covering Ginkgo Bioworks daily on that Twitter page. So you can definitely follow that out and see if you're excited. See if you are excited about the company. You can follow the coverage because I'm very excited about the company and excited to cover it. All right, everybody. Great content you're putting out, Amit. Trying to catch up. Thank you, DRK. Appreciate it. I will see you guys on late night stock talks today, 11 p.m. Bye-bye, guys.